Hello, everyone. Welcome to Cherry Bekaert's Government and Public Sector Podcast. I'm your host, Danny Martinez. I'm a partner in Cherry Bekaert's CFO Advisory Practice, and I lead the industries of state and local government, not-for-profit, and higher education. What our group does, a national group that all year round we provide accounting and financial reporting assistance for those industries. Anything from helping to close the books at year end, evaluating process improvements, and of course, implementing new accounting standards, which is what we're going to be discussing today. This is the second in our series on GASB 103, Financial Reporting Model Improvements. You can find our first episode where we discussed management's discussion and analysis, the AI assessment tool that we built, wherever you found this podcast. Today, we're going to be covering what many feel is the most challenging area in GASB 103, which is the changes to the classification and presentation of the proprietary funds. To help us do that, we have a couple of guests. First, the man that needs no introduction, but we'll let him introduce himself anyway. Scott, please introduce yourself to this audience.
Sure. My name is Scott Anderson. I have been with Cherry Bekaert for over 20 years, sit in Raleigh, and I'm an audit partner and spend a lot of time following the GASB deliberations. And Danny and I just love in our spare time talking about the latest with the GASB.
Sir, thank you for joining us again. And we have a new guest, Alyssa Rousseau. Alyssa, will you please introduce yourself to the audience?
I'm Alyssa Rousseau. I'm a senior manager on our CFO advisory team. I work with Danny, and my focus is higher ed, public sector, all of those kind of entities, and providing services to them.
Thanks, Alyssa. We're very happy to have you on the podcast and also on the team. So look, we're going to start off with Scott. I have a question for you. So as I teed up at the beginning, the classification and presentation for the proprietary funds is changing. Let's start out in laying the foundation with what GASB was attempting to do with these changes.
Yeah, so GASB was trying to make this statement a little bit more effective, a little more useful for users of the financial statements. And as with all projects, they began by reaching out to those who use the financial statements, asking what they liked about it, what they didn't like about it. Resoundingly, users came back and said that they loved the operating/non-operating approach, that presentation was helpful. But one of the things that they found less helpful was that it was not very consistent. The prior rule under GASB 34 was that governments can set their own policy for what operating and non-operating meant, with loose guidelines to be consistent with your policy and make it approximate how the cash flow statement is presented. And so a lot of governments were on the same page with what that meant, but there was some variability. There were some governments who did different things, and that made these statements less useful. And so the GASB decided to actually come up with a definition for what operating and non-operating meant. Non-operating was actually what they're going to define. And then in order to capture all types of transactions, they define operating as anything that's not non-operating. Sorry for the double negative there. But the way they defined non-operating was subsidies, contributions to endowments, financing activities, gains, losses on the disposal of capital assets, and investment income and expenses. So it's a fairly rules-based approach. There's a finite number of things that should be a non-operating, and everything else should be an operating, and that hopefully will improve the consistency and comparability of that statement.
Alyssa, Scott just touched on a little bit there some of the definitional changes within GASB 103. Can you dig a little bit deeper in explaining, what the definition is, again, for non-operating and then operating revenue, as well as the definition for subsidies, which is a classification within non-operating revenue?
Yeah. So the non-operating, as Scott said, is where they decided to put those definitions and give those 5 specific criteria of what is classified there. And so you have those contributions to permanent and term endowments. There's revenue and expenses relating to any financing arrangements, resources from the disposal of capital assets, so your gains and losses on your sale there, and any investment income and expense, And then that last one that you mentioned was subsidies. So that's kind of more of the bigger change that we're seeing. And those subsidies are going to be your resources received from another party or fund, which are non-exchange. So looking at mainly your grants and those non-exchange grants. It can also be resources provided to another fund or another party that are non-exchange. And then the last one that kind of falls under subsidies is transfers. So any transfers between funds or transfers between entities.
Thank you, Alyssa. So Scott, Alyssa mentioned there that subsidies are getting, a lot of attention. Can be a little bit more challenging. Where do you see governments having the most challenges, most difficulty in understanding how that definition that Alyssa just pointed out aligns with their own accounts and transactions?
Well, as I mentioned earlier, this definition of non-operating is very rules-based, but the definition of subsidies is very principles-based. And I find a lot of governments are trying to apply the subsidies definition as if it's a rule. And they're having a hard time understanding what that means to have certain transactions impact pricing, impacting the rates that they are charging, when a lot of times they're not setting their rates based off of subsidies, and they're having a hard time operationalize what that means.
Can you give some quick examples of like certain types of governments and where they're having that challenge? Just a couple of specifics.
Yeah, I would say that the healthcare industry is one where they're having a difficult time applying the definition. Again, they don't set their rates based off of it. The latest implementation guide exposure draft, I think, caused a lot of confusion because they use an example for Medicaid subsidies, which anybody in the healthcare industry would never look at a healthcare subsidy healthcare supplemental payments. They would never refer to that as a subsidy. As far as they are concerned, they are providing healthcare services and somebody is paying them for those services. Either it's the patient or the insurance provider, or in that case, Medicaid is paying them. But they're providing the service that they would call that a charge for service. But the GASB Q&A refers to this as a subsidy. That would be a fundamental change with how they would report it, and it did not make sense to a lot of those folks. By the way, GASB is tossing that out. They decided they're not going to provide specific guidance for healthcare, but that's one of those places where it would be a challenge. Another example would be higher ed. You'll see a lot of higher ed entities that show grants up in the operating section because they don't just teach students, they also provide research, and a lot of times that research activity is funded by grants, and that's basically their operations. It's what they do. They would not incur those operating costs without those research activities, and so they're trying to operationalize that because they don't necessarily set their tuition rates based off of those activities.
Thank you, sir. And then definitely more to come on subsidies and kind of seeing where we land with some of these bigger types of transactions as stakeholder groups, meet and discuss and try to, figure out what that principles-based approach means to them. Let's move to presentation. So Alyssa, how do these changes impact the presentation of the proprietary fund statement of revenues, expenses, and changes in net position? In particular, can you share a little bit with our audience about the new section of non-capital subsidies and then how transfers is changing?
Of course. So the biggest change there, like Danny mentioned, is that the subsidies and that capital versus non-capital. So you'll have your operating revenues, operating expenses, and then you're going to have those non-capital subsidies. And that piece will also include non-capital transfers. So having to go through your transfers and look at what transfers are related to capital activities and which aren't. And you're going to have to split those out because your capital transfers are going to end up in the other non-operating revenue and expense section, which will be at the bottom of that statement.
And so for those of you all listening and thinking about your chart of accounts, many of you all probably have transfers just in one GL account. And so combing through fiscal year 26 activity and determining which transfers are non-capital subsidies and then which ones are for intended for capital purposes and need to be presented and non-operating, will be something that you'll want to do as you go through implementation. Scott, how do you think that this change in presentation will impact users' views of the operations of these funds? And in knowing that it's going to be changing, the presentation is changing, what can governments be doing now to inform interested parties to these changes?
Honestly, I really do not think this should impact users' views of the operations unless a government just wasn't doing it right the first time, because they didn't change the concept. They didn't change the purpose of these funds. They were just making things more clear. It's always was supposed to be about cost recovery. The whole point of these proprietary funds was to demonstrate how an activity is being self-sustained. And all of this does is highlighting a little bit better when activities are being subsidized. Users of the financial statements should have already known that. That should have been somewhat clear. But I think that this does make it more clear and highlights the point. The term subsidy will be in these statements, and that will be a change. And going off of that, some users some preparers are a little concerned about the use of the word subsidy. Some view it perhaps being having a negative connotation. They don't want that front and center in their statement that an activity is being subsidized. And so it would be a good idea to start talking to governing boards, letting them know that that's what's happening. But when you step back and think about it, this makes a lot of sense. A transportation entity is almost always subsidized. They're never going to charge fares that's going to cover all the costs of a bus system, for example. And this is going to very clearly show the rates, the costs, and then the amount that's being subsidized that's not capital related. It's just better information, more useful.
Thank you. And I do recommend, Scott said that subsidies term, it's really going to be called out, pretty bright line, because non-capital subsidies is going to have its own total on those statements. And so just communicating and explaining to the governing body what GASB 103 is doing and why, to Scott's point, I think would be very helpful rather than surprising them on the back end with the issued fiscal year 26 audit report. Alyssa, we've been in the middle for a few months now on working through assistance with implementation, across everything that governments need to do related to 103. But in particular, what are we doing? What are you seeing related to how we're assisting governments with the update to the classification and presentation of the proprietary funds?
Yeah. So for our side on the advisory and helping with that implementation it's a very collaborative effort of reviewing those GL accounts and GL activity and transfer, especially in the transfers accounts, and kind of getting an understanding of where things were currently placed and what meets the specific definitions, especially around subsidies. And we've been seeing a lot in grants, making sure that those are classified correctly, either as capital or non-capital, and then going through that transfers activity. But we're helping kind of provide a roadmap and sort of remapping of where those accounts originally were classified on your financial statements and getting those into the right categories for going forward and how to remap those.
And so as you all go through updating the presentation of your financial statements and the remapping, you be thinking about going into whatever you use to draft your software, whether it's the Word and Excel document that you need to remap and regroup, or if you're using Act for writing software, getting in there and reorganizing the accounts, building that template. There's a lot that you can do with this prior to year end. I know our June 30s are coming up now on year end, but a lot that you can do in terms of the reorganization and remapping prior to year end, so you're not caught at the end having to try to do this and when you're kind of finalizing or issuing your audit. We like to always end the podcast with some words of advice for governments as they implement. So Scott, for this area, we'll start with you. What's one takeaway you'd want governments to know related to proprietary funds classification and presentation related to GASB 103?
Well, related to implementing it, I would say take a step back, look at the broader picture, look at what you're trying to communicate. The GASB gave you some guidance, but they're not going to spell it out for you. And so the more you can document your position on certain things. I was looking at the Q&A from last year, and I got a kick out of the answer for related to pilots, our pilot subsidies, payments in lieu of taxes, for those of you not familiar with a pilot. And the answer was, it depends on the substance of the transaction. And I think for a lot of these things, it's going to depend. Think through it, document your conclusion, and if you do that, it's likely defendable, and you're probably going to be okay.
Thanks, Alyssa.
Yeah, I'm gonna kind of sort of piggyback off of Scott's answer there of that you're looking at those transactions and having something defensible, but it's also going to be somewhat at the transaction level, especially when you're looking at transfers and grants. If you're not if you haven't previously been tracking those by that capital versus non-capital, that it's maybe not going to be as straightforward as just moving certain GL accounts, that there's going to be some maybe new setup of new GL accounts or some evaluation of specific transactions to make sure that those get in the right buckets.
Thanks. Scott, I'm going to put you on the spot. One more takeaway. Talk about transfers and major fund determination.
Oh, this was a sneaky one. You don't know about this unless you actually look in the COD instructions. Besides Danny, I don't know anybody else who studies those COD instructions, but the COD instructions clearly show that transfers now are included in that major fund calculation. It used to be done in other financing sources. It still is for governmental fund statements, but now these are part of expenditures or expenses that go into that calculation. So if you've got a lot of transfers, that could impact whether a fund is major or not major.
Thank you, sir. I always thought COD instructions were how you cooked fish. All right, perfect. So we will go ahead and wrap up there with my terrible joke. I will stick to my day job. If you all are interested in learning more about how our group assists with GASB 103 implementation, whether it be updating the management's discussion and analysis, the proprietary funds, or part 3 of our series, which is going to be around budgetary comparison information, now's the time. Please reach out to me, danny.martinez@cbh.com. You can also reach out to Scott S. Anderson at cbh.com. We look forward to being with you all on the next podcast. Also, you'll be able to find a couple webinars that we've done on GASB 103 to assist you all, and best of luck on implementation.